After 97 consecutive days of trading at a discount, Bitcoin's Coinbase premium has just flipped positive. On the 28th of August, 2026, one Bitcoin costs about $80,354 on Coinbase, up roughly 15% from $69,622 just 7 days earlier. The premium itself is tiny, at 0.0616%, but the message is large. US buyers are now paying more on Coinbase than the global benchmark price on exchanges like Binance. Think of this premium as a real-time X-ray of American demand, and that X-ray has just changed direction. The scale of the previous slump was historic. By the 16th of August, the Coinbase Premium Index had been negative for 90 consecutive days, already the longest streak since the indicator began. On the 3rd of August, the reading sat at minus 0.1369%. Then on the 24th of August it turned positive at 0.0052% for the first time since the 19th of May, before dipping back negative the following day. By the 27th of August it had climbed to positive 0.0616%, so this was not a one-day blip. Over the same 8 sessions, US Bitcoin ETFs absorbed $2.6 billion of inflows, according to Bloomberg. A crypto quant analyst says the shift signals a return of Bitcoin buying demand in the US market. BitGet research analyst Lacey Zhang adds that institutional allocation through ETFs is returning, but broader US exchange demand has yet to become decisively strong. Why does this matter for you? A positive premium means American institutions are paying up for spot Bitcoin. When ETF inflows pick up, market makers often buy the underlying coin on Coinbase, which pushes its price above Binance global average. Coinbase is the largest US-based exchange and custodian, holding nearly 12% of all Bitcoin in existence, so pressure on this venue is a meaningful proxy for American spot activity. Darnell Whitaker calls the premium a microstructure signal, a quick X-ray before you pull the trigger, rather than a standalone trade. Today's move also lines up with Coinbase shares jumping 11% in one day on regulatory optimism. But keep some perspective. A premium of 0.0616% shows early rotation, not euphoria. That is actually healthier than a speculative spike, because it suggests patient institutional accumulation rather than retail FOMO. The next test is follow-through. Analysts say a single day of positive premium is inconclusive, so watch whether it holds above zero for several sessions. If it does, the US bid is real. If it flips negative again, the rally could stall. Bitcoin at $80,354 is still about 36% below its October 2025 record of $126,210, so there is room to run if institutional flows continue. The key is whether broader US exchange demand strengthens beyond ETF flows. A sustained positive premium plus continued ETF inflows would be a powerful combination for a push towards previous highs. The takeaway is simple. The longest discount in Coinbase premium history has ended, and that is a regime change signal. But it is early, and it is fragile. Do not treat this as a standalone buy signal. Use it as confirmation that genuine US demand and ETF appetite are returning, then manage your risk around volatility. The market has just shown you who is stepping back in. Now watch carefully whether they stay.